Hey everyone, this is the video review for November 17th, Tuesday. Um, Today wasn't a good day, I would say, better than yesterday uh, in terms of trading wise. I took only 2 trades today. I really tried to limit the amount of trades I had so I could focus on getting those, kind of the best setups, the most clear premise, the most clear stop placements, the most sound premise for the trade, and then a good entry that provides a good risk reward. But these 2 trades that I'll show you and 2 missed trades that I had, I didn't stick to my plan. I artificially cut myself off before my daily loss limit was hit, just because I felt like I wasn't in the right mindset on the last trade. I felt after that trade I was not there all the way, and I don't think I was in the right headspace to really continue trading. So I just cut it off. Usually I notice what I'm off when I start to think of other markets, or I start to look at other markets and think like, oh, if only I could trade them, it would just be easier, or oh, if I do this differently, it'd be easier, things like that. And obviously that's incorrect, as we know, but it's just I notice when I'm thinking like that, I know I'm not in the correct mind. I don't have the correct mindset, so I pull myself out, stop trading, and just kind of watch the DOM for the rest of the session, as well as starting to do my written review. I notice how difficult this endeavor is. I've been disciplined in pretty much all my life, not all my life, but as in time wise, but these past 2-3 years I've been disciplined in diet, exercise, drugs, alcohol. I mean, practically everything in my life, and this is the hardest thing I could possibly do. It's tough to. It's like it demoralizes me, because it's just like I think about myself, and I think I'm a very disciplined person, and yet here I am taking trades that have not barely a single shred of the plan. So it's interesting. It's interesting, and I definitely wanted to make note of it. Another thing I'm going to do, what I'm going to do tomorrow, that's different, because I'm a big believer in the doing. If you do the same thing every day and expect a different result, it's insanity. So, being that I haven't seen the improvements I want, I'm not going to keep doing the same thing that I did yesterday. I'm going to try something different until I can finally start seeing slow improvements. And I think I'm going to try this strategy I kind of made up myself, calling it the improvement strategy number 1. It's simply, if I place a bad trade, well, let me first disclose what a bad trade is. A bad trade is not a losing trade. It is a trade that doesn't follow the plan. A trade that has no clear premise, no clear stop, a bad spot of entry for my plan. For example, a bad spot of entry would be right here at the 96 or 95.75. A better spot of entry would be here, because this is a better spot at 97.25, 97.50, because my first peel is at this 96, 95.75 level. So that's part of the plan, is to peel as it reaches the low, peel one more after it breaks, and then let one run. Maybe there's let's say it kept driving lower. Maybe still sellers were still interested in prices lower, and buyers weren't as much. Have one position on to let it run, just in case. But that's a bad trade. Bad trade simply is not following the plan. So the strategy is, if I place a bad trade, I will get out immediately. No hesitation, no excuses, no ifs, ands, or buts, nothing. Out. After I am out, I will do my day review, write up my written review, journal in DTG, and then post the trade notes on the blog. If I have more time after that, usually in the morning, if I cut myself after one trade and it's like 6:35, I'll have plenty of time left over, and I will use that time to review past video review sessions and trade notes of past days. That will give me more learning exposure. But of course, the goal is to not have a bad trade, so I can get more actual trading experience, as I do believe that experience trumps all learning. Really, I mean, as if I can experience the market and what my plan defines as my trading session, if I can experience that full session with a clear mind and full discipline to trade my plan, that would be the best experience I could ask for. Of course, that's what I strive for, and that's how this kind of this improvement strategy is intended to be. It's intended to kind of relate to myself that I love to trade, and me stopping myself out from trading, I hate it. I always feel like I wasted a day. I didn't, if I don't trade my plan, if I don't make trades that are part of my plan, or if I make even one trade that's not part of my plan, it just feels like I wasted a certain period of time in the limited amount of time I have to actually get exposure to the markets. So the idea with this strategy is to stop myself out immediately after I realize I'm in a bad trade. So if for example, a bad trade for me would be to enter right here. If I entered at 96, even right now, to sell, immediately flatten, that's it for the day. It could be 6:37 like it is here. If it's 6:37, out, doesn't matter, and I'm out for the day. If I'm out that early, I'll probably watch the DOM until 7:30 a.m. PST. But I will definitely start my written review faster, and the journal and all that sooner than later on a normal day. But just punishing myself for making these bad trades is, I feel, will help me realize the bad trades are what's causing me to not be able to trade, and I want to be able to trade. So anything that denies me that, I want to fix. So if I constantly make bad trades, then I won't be able to trade. Then I'll constantly get I'll be frustrated. I'll be frustrated. I'm like, why can't I screwed up? Now I can't trade. So then I'll think the next time I'll do something different. It's constantly gonna make me want to trade on my plan, want to always stick to the plan, and not deviate from it. That's just the strategy I'll be doing tomorrow. Also, I will be probably not tonight, since it is getting a little late. I will be making a template for my trade notes. It's going to consist of the entry price, the stop price, it's going to go from entry to stop to current price target, so like the low, something about that. But the main goal of it is to have the premise. So I list out what the premise of the trade is, what's the reasoning for that stop, what's the reasoning for that entry, what were some of the strengths of the trade, what were some of the weaknesses of the trade, did I trade per my plan, was it a winner or a loser. I don't want to know the nominal value. I just want to know if it was a winner or a loser, so that I can see visually, oh, the times where I don't trade my plan, it's a loser. Oh, the time I make these certain mistakes, it's a loser. Something like that. So when monthly I can go back, or weekly I can go back and take a look at these notes in a more structured format. But that's what I'll be doing. I'll be structuring my trade notes a little easier, so the reviews at the end of the week and the end of the month will go a lot faster. It'll be a lot easier. It would just be less of a headache, really, rather than trying to read pages and pages and pages of trade notes and thick bodies of paragraphs. But I think that's enough talking about the day and what I have planned for tomorrow. Let's get on the actual trade. So trade number 1 here is after a drive lower from the open. So we kind of stalled early in the morning at the early minutes. You can see the early minute trading. We have this kind of close range of 6 points. And then we start to see the break of that close range. We push lower, and then that's where I initiated the first trade. So we'll go over the first trade real quick. We'll let it play out. All right. So first things first about this trade, it's at the bottom. So automatically this is a bad trade, per my plan. It's immediately a bad trade per my plan because I am trading exactly where I should be peeling a position. Second thing I noticed about this trade is my cursor is hovering over a stop. So right here, I see. We'll rewind it here real quick. But you can see 180 trades in the bid and then 2 trades in the offer. So right here you can see not much trading happening at the offer, not trading at the bid. These orders kind of came in pretty fast, but still there was a definite lack of volume here compared to the other prices. So as you can see, my cursor is now over 39.50, 95.25. Putting this as a stop. So if buyers are willing to buy back here, showing interest, then the premise of the trade's gone. But the issue with this trade is it's just on this price level. It's on nothing, no other information. It's not that 95 has been holding and then all of a sudden turned offer and now offer's holding. It's not that 95 was bid and 95.25 was offer and it stalled for a little and buyers showed very lack of interest, but every time 95 would go offer, it would go back to bid and then back to offer, back to bid, and so there's only one piece of information, a lack of buying at this price level. So right there the entry is kind of shot. Like I don't know where to get in. And then this is the big mistake right here. The premise of my trade is now gone, right? I haven't gone in, but the premise of the trade of the lack of interest at 95.25 is gone. There's interest. Obviously, bid's holding heavy, offer's about to break, and there's definite interest. So the trade idea is gone. I need to look for a new trade. But as you can see, my cursor immediately rises up to 1 tick, thinking that, I'll just stop above here. Then I see and then I see more buying here at 95.50. So I put it up one more. I see lack of interest here. This trade just is complete forced. I mean, this is not, like, I am literally like, if the market price action here was a canvas, I'm coloring it the way I want it. You know, this is not a real trade. This is such a forced trade. It's such a terrible entry price per my plan, of course. Terrible entry price per my plan, and I'm forcing it. As I see the first premise get invalidated, I look for the next one above. That one gets invalidated. Oh well, if they're not willing to buy higher, they're not willing to buy here. This will be my stop. Oh, they're willing to buy here. Okay, this will be my stop. Oh, they're not willing to buy here. Oh, perfect. That will be my stop. It's just, this is such just a bad trade. I'm forcing it. I'm not letting the market come to me and give me, oh, hey, we don't want to buy up here. Every time price reaches up here, we don't want to buy. Then 95.25 is holding. Then it goes offer, and then it holds. And then we start seeing, and we don't see as much we see the buying slow down, and now selling starting to increase. A lot of contracts increasing. Boom, sell a 95 break, or even get stopped. That's a good trade. But this forcing, looking for a stop, waiting till I see, oh, it stops. Oh, price traded here. Oh, I gotta go one up. Oh, price traded here. Oh, I gotta go one up. Oh, this is a bad trade. Even how I managed it, you can even see right here the lack of interest in selling at that price compared to the lack of buying. Price ticks lower, but again, buyers still find interest in the offer. Bid can't hold. Now bid can hold that, and sellers just stopped. Right, so look. So you can see 75, 94, 97, 140, 152, 215. Bid holds 240, 259. Stays 260, 268. Boom. Buyers start buying back up. 95 offer. And the same thing. Bid holds, rises up, and then this one holds. Sellers aren't willing to sell here. That should have just been flattened right there. Shouldn't have gotten stopped out. The price action was telling me NQ was trading higher. It was trying to push lower on the entry. Watch it on the entry real quick. Entry pushes lower. Not much conviction. You can see kind of two-sided trading here. Not much of the one-sided that I'd be looking for on a push lower. Starts rising higher. Bad trade. This trade was not good at all. It's interesting here. I wrote on my trade notes a side note. I thought this trade was much worse. I thought this was a terrible trade. It wasn't a good one, but it wasn't a terrible trade as it made it out to be earlier. Had this price action occur not at the current low, and if I peeled one contract that was reached ticks away from its low, it would have been a good trade. I'm actually going to delete that side note because I don't know what I was thinking. After rewatching this and seeing me force the trade and force the stop, this is a terrible trade. There's no ifs, ands, or buts about this. This is a bad trade. Actually, I'm going to write that in real quick. Alright. Just wanted to write in there before I post it tonight. We will now go on to the missed trade. So the missed trade came, it came out 6:40, so not too much longer after this. I'll watch this. Let's see here. There's a price pair 59.7 even. 59.7. Okay. So it's around these price level. I just have to rewatch it, just so I can get a better understanding. There was a clear like interest in buying at the offer. Okay, 59,725. Okay. Just looking at these prices. Alright. Okay, this has to be the action I'm looking at when I'm writing my trade notes. As you can see, when 59.7 goes bid, it starts to hold. But look, I mean, there's no trading at the offer at 97.25. But then there is, right? And it breaks. So if I had a trade where my the idea was, okay, there's no trading at 97.25, stop up here. If 97 goes offer and holds, we get short. Right? Obviously didn't work out that way. Now we don't see as much selling. Then we start seeing kind of change, bid breaks, and then we start getting back over to this absorption, the refreshing of the bid. We see the refreshing at the offer. Kind of this back and forth, kind of trading. You know, as soon as it goes up, comes back. Now bid starts to hold. Offer breaks. Offer goes bid. Comes right back down. Bid no longer breaks. The 96.50s break on very little volume. We see one trade at the 97 evens. As you can see, I'm kind of looking for an entry right here. I'm curious though, because I can't exactly see the missed trade I'm making note of. Let me rewatch this one more time. Alright, so I found it. Let's see here. Alright, so we're trading lower. We start to pull back after buyers are starting to find interest into these prices at the offer. And we start getting back into the price pair of the 97 even, 97.25. So 97 even bid, 97.25 offer. And the first thing I notice is the lack of buying at the offer, the lack of interest at the offer from buyers, but the interest into the bid from the sellers. So I noticed that right off the bat. Right, so we trade higher. I immediately see buyers running and then buyers just stopping, sellers just pushing it back down. Right, every time it comes back up, sellers push, no buying. Then we see the offer hold. So now 97 even gets 97 goes bid to 97 even goes bid to offer, and we see it starting to hold. Right, price ticks up, sellers bring it back down. Price ticks back up, sellers bring it back down, and then we see bid break. When I start seeing that bid break, as this whole time compared to 97 at the offer, there wasn't the same kind of conviction. As you can see, the 246, there wasn't the same kind of conviction in the amount of volume traded at 96.75. There was, I think, about 100 contracts less. But you can see it was able to break it about 20 contracts. Then offer steps lower. Buyers buy it back. But when I saw this 97 even go offer and then start to hold, this I would have gotten short here. So the stop entry would be above the 97.25 with the premise of, since buyers aren't willing to, sellers are defending the 97. Sellers want 97 as offer, right? They're not willing to let price rise above 97.25, so they're hitting the bid and bringing 97 even back to offer. So if buyers can show more strength or sellers peel back on their defense and price rises up to 97.50, premise of the trade's gone, right? So I would have probably entered, I don't know if I would have entered on 96.75 after seeing the lack of kind of continuation from the selling. Probably would have entered after 96.75 went bid and then stalled. So maybe we would have gotten to fill here at 96.50, or possibly fill 96.75 if I got in on that quick pullback. But we start seeing the bid kind of drop, buyers slow down right there. No more buying, could have gone in right there, and boom, starts going down, offering lower. More buyers, sellers immediately push it back down, a little bit of buying here, not the same as the 149. You can see that, still more, bid breaks, goes back to, bid goes offer, and then it goes back to bid. Then we start seeing the holding back in the 96.50s. See price trade higher, buyers starting to want to buy higher, and the premise of the trade is still 97.50. That's a stop, right? So the premise of the trade is the 97.25 is being traded. Then we start seeing the sellers start taking control. So dismissed trade. It was I would have had to be patient, definitely. But this could have been a good trade had I been more focused and been more attentive to price action, which definitely need to work at, and I definitely need to focus more, 100%. So we'll go to trade number 2. There's 3 missed trades, 2 actual trades. So we'll go to trade number 2 real quick. Let me find where trade number 2 is located. One moment. 651. I think I'm going to rather than kind of play it through and scrub it through, I think what I'm going to do is I'm going to clip each trade and have a clip for each trade and label it so I can quickly go to each trade, post it if I need to, and I think that would just make everything easier rather than kind of scrolling through the whole trading session video. So I think that's what I'm going to do tomorrow. Let's see here, 651.36. Trade starts to build. See the offer holding, but not much selling into the offer. No high volume cluster here. Same thing. Sellers are starting to trade with more volume to the bid. Get short here. Actually, I might have to rewatch that because I don't understand the trade here. Okay, I don't see this trade. What was the stop? Stop is at 93. So I'm playing. So what it looks like I'm playing is the held offer and the lack of interest at the very end of 93 or the 92.75s being offered. So I think I'm trading based on that lack of interest. So we can see here as we start getting higher in the bid, you can start seeing the offer kind of slow down. Alright, so the amount of traded that the offer slow down. 238, 239, 280. Kind of increases actually now that I'm rewatching this. So I don't exactly see where the trade is. To be honest, I don't even know why I entered at this price specifically. There wasn't entering here would have made sense if there was not much. If there was 77 and 1, right, and we can see it trade here. If 77.1 or 77.5, and then we see the offer hold after every time it goes back and then back up, back in this price band and so on. And then we see the offer hold, and then the amount of sellers trading, the volume being traded at the bid starts increasing. Boom, hit the bid, 92.50, 92.25 makes sense. But here it just I don't understand this. This is. I mean, that makes complete sense why I stopped myself out after this trade, because this trade is terrible. This is just price action. I can't, to me, I can't decipher this. I mean, you have a lack of buying right there at that immediate moment, and sellers being refreshed, and then buying stepped in, right? And then you see more buying step in and lack of selling. And you see some selling, but it's not enough, and then you see immediate buying. What could have gotten me in here? This is a bad trade. We see the lack of selling here at the 92.50s. Oh shoot, actually I did this twice. You see the lack of selling at 92.50s. You see the offer kind of hold, and then you immediately see traders hit the bid. I mean, I guess that could be the entry, but that's to me, I don't think that's enough convict. This is a hope trade, like me hoping that the trader who put on the volume, or the traders who put on the volume into the bid, I'm hoping there's other traders down here willing to just sell and keep selling. But the price action doesn't make sense, and the entry is off. And I mean, as I wrote here at the bottom of my trade number 2 review, the entry's off. The premise isn't there, and the stop doesn't make sense. It's a bad trade, definitely. I got stopped out and stopped trading after the day for this, because I mean, there was no clear controller. There's no. I mean, after getting into the trade, you can see bids hold. So you'll see we get in, just for a second, boom. We get in, and bids holding. Like it's, and as soon as this went, 92 went bid, or 92.25 went offer, buyers stepped up, took that immediately, and defended 92 even breaking. I mean, I couldn't have said it better here in my review. The entry's off, the premise isn't there, the stop doesn't make sense. This is just, bad trading. And what I need to do to improve this is to let the market show me, or to let the opportunity come to me, not force the opportunity. This is me forcing the trade, forcing the opportunity. These 2 trades I made today were forced trades. They were forcing an opportunity rather than letting the market give me the opportunity. In a perfect scenario here, we would have seen here, maybe 92.75 breaks the offer and goes, turns bid. Immediately sellers break it down. Goes offer one more time, sellers break it down. And then the offer starts to hold and buying slows down. The bid's starting to wane out with sellers putting more and more volume into the bid. Bid breaks, and then we see the offer one more time hold. Like, let's say the offer held here, and there was a obvious lack of buying here. Boom, short, 92.25, stop, 93.25, 4 ticks higher. Usually my stops are about 4 or 5 ticks. Just like that. I mean, that price action where it's still 55 but 132. If we had that premise, the lack of interest, 93s, and the offer holding, and then the bid going offer, and then holding here at 92.50s and in the 92.75s, this would be a good trade. Near NQ's near its lows. NQ's, got no high volume kind of area here, so it's not like it's accepting this price. It's in the middle of the value areas. It's in search for one, and you have ES here, haven't really made kind of a value area, just a little volume cluster. So you got a volume cluster here, bigger kind of volume cluster. This is what I would say is like the value area, and then this cluster, interim momentum, interim cluster, and so on. But had that happen, this would have been a great trade. There would have been a premise, there would have been a clear stop, there would have been, good entry, NQ pushing lows, this, that. But this trade was terrible. And so I stopped myself out. So we're going to go to missed trade number 2, and it's actually seconds after this trade. So we'll watch it real quick, and I'll show you what I mean by it's seconds after. right? So let's see if we can notice it live. Yeah, right there. Right. I mean, you can see. I'll pause it, but I mean that's just clear lack of interest at 92.75, when literally 20 seconds ago, buyers were more than willing to buy at the 92.75s. I mean, look, as I'm in the trade, buyers buy it. They're willing to. They buy it here. They bring it back. They try to push the 92.75s off the offer into the bid. I mean, you can see the clear interest at the 92.75s at this current point in time. And then all of a sudden, about, maybe 10 seconds later, we get back there, and there's nothing. Look, 1, 2, and it's not like they didn't have time to buy into the offer. They had plenty of time, and then boom, the break. Or let's rewatch that one more time. Boom, bid goes offer starts to hold, breaks, offer starts to hold again, and then you see that big order, that 228 coming in at 92.25 right there. That's when you would have sold. I was ready to sell. I didn't do. I hesitated. Clear stop above the 92.75s from the lack of interest, or at the 93 even because of the lack of interest at 92.75s. Clear stop right there. Clear premise. Buyers don't want to buy at the 92.75s if they can show that they're willing to buy at the 92.75s. Premise of the trade is gone. I won't give it more than 93. If they're willing to buy here, more than likely willing to buy here. Sellers are willing to defend this price again. I don't want to be in this trade because that's what I'm leaning on. This is the wall I'm leaning on right here. And then to add more conviction is the offer, the 92.50s turning offer and then holding. And then all of a sudden the change in volume going from the offer being traded into the offer, right? So you see 274, 270, 282, 284, 330, and only 80 still. Marginal difference, and then all of a sudden, right around here, you get that 228. Boom, 228. This will boom immediately hit the bid, 92 even. Hit it, enter. Caught a quick flush. Just quick break. This isn't one of those hindsight trades that sometimes I have missed trades about, where I'll notice it after the fact. This I saw in real time. You can see 652 saw the entry for the break. Didn't take it. Yeah, didn't take it. I saw in real time, so it's not like I couldn't take this trade in real time. So definitely I wanted to took a subpar trade instead, and I wasn't primed to take the opportunity for that big moving fast break trade. So something I definitely costed me quick 3 points maybe. Could have been the winner of the day, of course. A lot of these could be winner of the day, but every day there's another opportunity, and every day there's always some big break. So last trade I'll be going over is another missed trade at 657. This one, once when it hit 7 o'clock, I kind of stopped and I went back to doing my day review and journaling and watching some more Dr. Steenbarger's work on psychology, because I knew my mind wasn't right. I was thinking I'll trade crude oil instead, and I'll look at the COT report and I'll do long-term trading, or I'll do I'll go back to charts and this and that, and looking for easy ways out, looking for something just to make me feel good, to be like, oh, it's ES, I can't trade, I gotta trade a different market, I gotta go back to the treasuries, I gotta go to crude oil, maybe I'll trade natural gas, and then I'll be able to trade well, and because I'm in natural gas. It doesn't make any sense, obviously, which is why I cut myself off and kind of immediately stopped thinking that way and started watching more and reading more from Dr. Steenberger and his psychological work. So, but yeah, back to the trade number 3. We'll go over that real quick. Won't be too long. See if we can see it in real time. So right now we're pretty much, 90 even, showing some lack of interest. We were waiting on the 89.50 to hold on the offer. The 89.50 go from bid to offer and hold. And then price broke. So really the missed trade here is seeing when price rose up and 90 even, price went down and then started coming back up, and you could see the lack of interest at the 90 even level while the sellers started pushing it lower. Wasn't really ready to take this trade yet until I started seeing this 89.50 hold at the offer. So it broke back up, broke it down, and then I started seeing the lack of buying. Boom, break, 90, get in right there. Issue with this trade is it's not a good trade. And I made note of this. This isn't really a missed trade, as I noticed how price is a couple ticks away from its low. So this trade would have been even if it is a winner, because obviously it was a winner if you could just play it forward just a little, right? It's a pretty big winner. Still a bad trade because it's not part of the plan. It's trading off of a near ticks below the low. So this would not be part of the plan. Had this trade been up in the 90.50s, 90.25s again, great. This would have been a good trade, and I definitely would have. Wanted to take this trade. Had it, had it been there before. You know what I mean? I don't really want to go over this trade too much because I think it's pretty plain and simple. It's pretty straightforward. You see the offer holding at 89.50. It starts not much conviction at 89.25, and then offer holding, boom, breaks on 27 contracts, and then lack interest at the 89.25s now, and it gives you more conviction after you get in at the maybe 89 evens or 89.25s, and then price breaks. And there's not much else to really go about that trade. The premise of the trade on this one, it's like I said, pretty straightforward. The lack of interest at the I forget what price level it is. I think it's the 90 evens. Yeah, so the lack of interest in the 90 evens with a stop at 90.25. Possible entry at 89.25 or maybe 89 even. More likely 89.50 because we were waiting for we were really waiting for that 89.50 kind of to hold. We knew the 89.75 would hold, but 89.50 needed to hold. Once we saw that, probably would have gone filled 89 even or 89.25. Like I said, this it was a good trade had it been somewhere else, but not a good trade because it wasn't where I'm supposed to be trading per my plan. There's the risk reward is supposed to be, if my stop is 5, it's supposed to be 1-to-1 with the first peel. So if my stop's 5 ticks away, the first peel needs to be 5+ ticks away. But I don't want to sound like a broken record, but again, had this been at a different price point, the premise of the trade was clear. We were seeing the premise of the trade was seeing the clear lack of interest in the buying in the 90 offer, and the clear of lack of interest to hold the bid at 89.25 now. This gave me strong conviction that the buyers were not attracted to these prices, and price would have to auction lower to entice more buyers. One thing that actually reminds me of is, let me find it here. Give me one moment. Okay, I found it here. One thing I forgot to mention, I was just saw my notes, is if we pay attention to the 89.25 and what has been traded at the 89.25 in the past about 30 seconds, right? So just watch the 89.25 level and see how it reacts. Lack of selling, obviously. Selling starts to pick up, and it breaks. Then you start to see the lack of it again, breaks again, but still more buyers willing to put more volume into the 89.50s, right? So we see the selling 363. It took on 363 contracts to kind of partly break it. And then again, we see here the 132 it took to break it. And now they're defending it from going past 89 even. 226 was trading into the 89.25s. Now, we see the lack of interest at the 90 evens. Price starts ticking lower. Price reaches that 89.25 bid. And then watch how much it breaks on. Look, you see the buyer's interest and the offer, and if it breaks on about 20 or some contracts on a price that it took about 100 contracts or so to break. It now took only 20 contracts to break. Whoever was defending the 89.25 price, and whoever was unwilling to let 89 become the offer, wasn't there. They were gone. 89.25, the buyer wasn't there. 89.25, the refreshing bid wasn't there. The volume into the offer wasn't there. If noticing that previously 30 seconds before and taking note of that and realizing at the 89.25 what's happening there, and then seeing that not happen again 20 seconds later, that could give you a big clue about what is to come. And as you can see, I'll just scroll forward. 89.25 would have probably been the entry. So we scroll forward, and you're going down about 5 points. Price reaches back up. But point is, big winner. I'm not trying to glorify the potential profits or whatever, but I'm trying to kind of show that if you follow your plan, specifically, I guess you could say, if I followed my plan to the T and gotten in exactly, on the right trades, on the right opportunities with the right premises, the clear stops, and at the clear points of prices compared to where the low or the high is, the more times than not, I notice the outcome is favorable. And I just want to point that out just so I can show to myself and to if anyone's actually listening and watching, had you followed the plan and followed the trading strategy and noticed what was happening 30 seconds beforehand at that price, you could have seen a great trade and gotten in a great price, a low risk, and obviously the great potential. So all I'm trying to do is just show that following your plan, following your strategy, more often than not, of course, if it has an edge, flipping a coin is, may or may not have an edge. I don't know for sure. But the point is if the actual methodology actually has an edge, following it and not deviating it from it and not adding your emotional overlay to it, it leads to, in my example, following my plan would lead to a favorable outcome. Sticking to the process and focusing on the process would have led to the outcome I seek. In that, me just trying to show the final result of the trade is just trying to make it real, trying to make myself realize that, hey, following the process and following the plan to the T leads to the profits that I seek. That's what everyone wants, is the outcome. No one wants a loss, right? We all want the profit. That's what we all want. But making that real to me is why I show the end of the profit. But that was the final missed trade. After this, I went back to the day review. That's going to be it for tonight. Tomorrow, again, I'll be implementing the improvement strategy number 1. If I make one bad trade, that's it. I'm done for the day. No more. Stopping myself out. I expect for the rest of the week to maybe get one trade in, 1 or 2 trades. The goal, of course, is to keep increasing that day in, day out. Maybe getting 3, 4, and then maybe just getting 3 or 4 hits my quit target, or getting 3 or 4 hits my stop target. But those are still good trades. The trades I'm making are still good trades. They're not bad trades. Like Mike Bellafiore always says, 1 good trade, then 1 good trade, and then 1 good trade, and then 1 good trade. That's the goal. So I'll see you guys tomorrow. Thank you for anyone who's actually watching. Hope your trading day went well as well, and I hope you followed your plan and focused and stayed disciplined. I'll see you guys tomorrow. Bye.